Hey guys, I hope you're having a really good day and making some really good trades. And this video is just going to be about explaining how Market Cipher works and all the signals, right? What is all this? Just explaining like a little tutorial, right? There is one on CryptoFace channel and he is the creator of Market Cipher. So obviously if you want a better explanation, you should definitely go there. But some people have been asking me to do one, so I'll just make a quick one for everyone here. And so we're going to start with Market Cipher A, which is the top one right here. This is Market Cipher A, this is Market Cipher B, and then we have the new one called Market Cipher DBSI. So that one we'll get into later, but we're just going to start with the basics. So Market Cipher A, right? Let's just look at this chart. Double click on it, get rid of Market Cipher B. So as we can see here, we have all sorts of dots, triangles, X's, lines, and the EMA ribbons. So basically these are just EMA ribbons. They're very basic. When you're going up, these EMA ribbons are light, and when you're starting to go into a downtrend, these EMA ribbons turn dark. And Market Cipher has been designed to work with hike in a sheet candles. Sorry, right here, hike in a sheet candles. So if you use regular candles, it hasn't been designed to work on it, and it's harder to kind of like look at what's going on, in my opinion. But yes, you could definitely use regular candles if you want. I don't really recommend it. I use hike in a sheet, and that's what it was designed to work for. So to work with. So that's something you should definitely know. And so some of these X's right here. So these X's on the larger time frames are more reliable. So these X's mean market reversal going down. So as we can see, X right here started going down. So if you enter a short based on this X, these are 4-hour candles. So these take time. So you can play this out. You could made 3% on this one, right? On this X right here, if you entered around in the middle, you could made 7%, right? So these are just indicators on when to buy and sell. And then you have these big red ones, right? So on the red diamonds, on the larger time frames, this is when I would enter short positions, right? So here I entered a short and then made 15%, but with leverage, it was definitely more, obviously. And then on this one, my God, this one, we entered a big short. I know everyone that does Discord made some really good gains. Rode it all the way down to like 16%, something like that. Really good gains. Obviously we could have held it all the way down here, but obviously we can't predict the future, and I didn't know we were going to dump to 30. I didn't think we were going to go that far, but we did, right? So these indicate big market reversals on the larger time frames. And yes, the yellow X's. Now to get into the yellow X's, these mean manipulation. Sorry, let me get rid of the DBSI. These yellow X's mean manipulation. So the price is being manipulated in a way that they're going to most likely try to push it down. That's usually the way it happens. So when you see yellow X's, I don't really like to be in the market because you can get wrecked very easily. It could reverse up very fast, or it could go down very fast. So you never know, right? It could be indicating that it's a buy signal here, but then this comes, you want to get out your position. You want to close, you want to get out. That is my opinion. That is what I do. I get out when I see these. I take these pretty seriously. As you can see, yellow X is manipulation. Sometimes they're not as severe, because we saw this one. I don't know if people remember here, we were having a very nice little triangle like this, and then we broke down. But it was on a manipulation X. So we broke down all the way down here and then reversed to the upside immediately. Like, it was so fast. It happened within like 30 minutes, 15 minutes. And we're already back up. We're breaking back into the triangle, going back up. So manipulated to go down. So when there's manipulation, you already know what's going to happen. And we'll get into these green dots in a bit. I just want to cover the blue ones. So the blue ones the blue triangles are market reversals from the previous trend. All right, so you can see how the trend is reversing and we're going bullish from bearish. So yeah, so we're going bullish for bearish. Yeah, so this was a bear trend right here, right? And then we're starting to go back up. This is the confirmation that it's reversing and we're going back up. Doesn't always mean it's guaranteed to keep going, right? So you can see reversal, get confirmation, and then the green dot, and then we go up, but then we went down in a downtrend. You know, a little small red square for a little bit of foreshadowing before we start going down. And yeah, now the smaller ones, right? So these ones, the small yellow ones, right? These mean bullish continuation, right? So if you're in a bull trend right now, the yellow squares mean a bullish continuation, like the trend is going to continue, right? Or if you're in a downtrend, the yellow squares mean like a end of the bearish trend. So that's what they mean basically. So I don't know if I explained it properly. So if you're in a bull trend, you're going up in an uptrend, the yellow squares mean you're gonna most likely keep going. And if you're in a bear trend, it means and you see the yellow squares, it's probably going to stop soon. Right, so this is like right here, the trend is probably going to stop as you're used to getting some more yellow squares. So it's going to be bullish soon. And the red squares are basically the opposite. So if you see some red squares, right, you are in a bear trend, in a downtrend. And it's most likely going to continue as you see more of them. So you see some of these here, but it's only one, and we go down, and then we get some yellow ones back, so we keep going up. All right, and look at this. So many red little squares. The downtrend is going to continue, or the bull trend is going to stop. The uptrend is going to stop. I say bull, bears, up, down. This is the same thing. But yeah, that's basically what it is, and it's pretty simple, not too complicated. There's a legend in the description for the live streams, so you guys can check that out. And yeah, so we're gonna take a look at market Cipher B now. All right, so I want to cover the green dots first with these green dots. So when we go down, like we fall down, like we go down, and we get these big green dots, right? The big ones, right? Not the small ones like this, the big ones. I usually think that these are a bottom, right? As we can see, a bottom. We bottomed out. We're going to most likely go back up. And the small green dots are called potential longs. You can potentially long this and make some money, or the small red dots are potential shorts, as we can see. This was a very good potential short, but there was a big red diamond, so bearish continuation, downward trend continuation, and it's going to continue. Right, so very, very good. Now, when I see a big green dot like this and a green dot like here, so this would be a bottom confirmation, right? A bottom, bottom dot around this area, and then the momentum waves start to go back up, and this big green dot would be my confirmation that we are going to keep going up, right? It doesn't tell you for how long, but yeah. So if you entered here, and then you see like this big green confirmation, you could ride it up, and you could have made 19% at the peak, right? You could have sold, obviously, you could have sold at 15 before, after, I don't know how long you want to hold the trade for. But yeah, that's basically what it is. And now we can get into more of like what market Cipher B is. So market Cipher B, these are just momentum waves with a momentum of the trend, right? So the blue waves, right, when you see the light blue waves cut in, that's usually it could start reversing, right? It could start going up. So when you see like a big blue wave like this, that's very good. I want to find an example right here, kind of I want to explain better, because you kind of need to look at both. Yes, so right here, so this we see this big momentum wave coming down. The light blue wave cuts in. That's usually your bottom. Like you can enter a trade right here. This is called an anchor wave, the lower one. And if you see another one come up again, but it's a little bit, it doesn't go as low, this would be called your trigger wave, right? And this usually you want to enter in at the trigger wave, not the anchor wave. You can always make trades from the anchor wave, but you want to enter in at the trigger wave, and then you can ride it up, as we can see right here. If you enter it at the trigger wave, fantastic. As the price goes lower, but the momentum is not going lower. The price went lower, but the momentum is not. So you want to enter right there. So that explains basically the waves right now. So when the waves are up, they cut in. You could enter potential short, right? Same thing when from the downtrends to the uptrends. And now the yellow is called the VWAP, right? So that one, usually when I see the VWAP cutting in with the blue waves, that's a good sign to enter a trade as well. If the VWAP is going the opposite direction, you know, or like it's not really going with the waves, then I wouldn't really enter a trade like at all. I just sit it out until the VWAP comes back with the momentum waves. And the green wave and the red wave right here, that's just the money flow. So green is very good. You want to see green. You want to see green, that's life. As CryptoFace says, it's life, and you see a lot of money, lots of trades happening. Very good. But when you see red, it's bad. You know, there's money flows going out. So you want to see a lot of green. So green is good. I think with Ethereum, we had some new all-time highs with the money flow at one point. It was absolutely insane on the daily. Oh, let me see if I can reset this chart. Yeah, see how much money flow we had? Huge amount. And let's go back to this chart right here. Okay. And the red line and the purple line are the RSI and the stock RSI, right? So the stock RSI is the one that's red, and when it flips, it turns green. I don't know if you can see it. Let me zoom in. Right now we're seeing a lot of red. So when they flip, when they cross, when the stock RSI crosses, they flip, and then that's good. That's really good. And then the purple one is just a regular RSI, but they kind of follow each other, to be honest. They're pretty close together. And yeah, I think that basically explains what Market Cipher A and what Market Cipher B is. It's pretty simple, nothing too fancy. Yeah, that's basically my little tutorial for Market Cipher if you don't know how to use it. If you guys enjoyed it, leave a like and subscribe. If you didn't, just let me know what I can improve on, and maybe I can make a better tutorial for you guys. Anyways, leave a like and subscribe if you enjoyed the content. Peace.